Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock by analyzing an article titled, Will Palantir be a $1 trillion stock by 2035? For more videos on Palantir Technologies, go and annihilate that like button right now. Subscribe if you are new, don't forget to become a member of this channel, and with that being said, let's jump right into today's story. Palantir Technologies, as you already know, is a big data and analytics company which serves both commercial enterprises as well as government agencies. And some investors believe this company could be worth $1 trillion by 2035. Palantir Technologies has had a phenomenal 2023, and many investors believe they will have a great 2024 as well by increasing in their share price from $16 up to $25 per share. The main hype around Palantir Technologies is, of course, their artificial intelligence platform called AI. This caused their share price to surge by 160% throughout the year of 2023, and some investors believe that this momentum will continue throughout 2024 and 2025. Palantir Technologies is already a large cap stock, and they have a market capitalization of around $35 billion. The question now for investors is whether or not Palantir could be a $1 trillion company by 2035. And honestly, I don't think so. I think this is a disservice when various financial reporters try to overhype a phenomenal company. Now, I personally hold Palantir Technologies in my portfolio, and I've been reporting on this company for quite a while now, but the math just does not add up for this $1 trillion valuation. Based off of current metrics, Palantir does not seem to appear to have a likely path to a $1 trillion market cap by 2035. And the reason we know this is because we can simply just do the math. Over the next 11 years, Palantir would need to increase in their share price by 36% per year on average. And if you are familiar with the stock market, this is untenable. You may see a stock increase or decrease by 36% in any given year, but to have a 36% growth rate in regards to a share price over the next 11 years every single year on average is literally unrealistic. Again, I think this is a disservice when investors overhype a good company. Because once this company does not meet the expectation of growing by 36% per year, this frustrates investors who end up selling the company. And this is terrible because Palantir is a great company, so why would you sell it? Well, they're selling it because their expectations weren't met because they read a lousy article or listened to a crazy financial reporter. Now, one of the arguments that I've heard recently is that Palantir Technologies, because they surged by 160% in 2023, that they could continuously do that throughout the next few years to achieve this 36% CAGR in regards to their share price. However, this is a very faulty argument. Just because Palantir surged over the last 12 months by 160%, that does not mean that this is sustainable momentum. The whole reason why they surged in their share price was because of artificial intelligence hype and their artificial intelligence platform. And although I am extremely excited for the multitude of commercial contracts that are going to come from their AIP product, I don't think that it's going to be able to sustain a very high share price appreciation of over 20%. 20% would already be the maximum for me. And remember, we are talking about an average share price appreciation, which is very good. To put this into perspective, the S&P 500 returns around anywhere between 8 to 12% in any given year. So for Palantir Technologies to have over a 20% CAGR in regards to their share price, again, is unrealistic. That should not be a part of your expectations. Now, for clarification, I am not a bear on Palantir Technologies. I still think that this company has great stock price appreciation left in them. I have a problem, though, with people who overhype good companies. Palantir, since their DPO, has given investors in return to them around 75%, which beat the overall S&P 500 over that same time frame. However, this is not nearly enough to get them to a $1 trillion valuation. I find the majority of people that I interact with either have no idea how to properly value a stock, they don't understand how market capitalization works, and they overhype companies, thus taking on unnecessary risk due to unrealistic expectations. But then you might be thinking, well, the company has been landing a plethora of various government contracts and commercial contracts, such as HCA Healthcare and Cleveland Clinic, who are using Palantir's product, which is their AIP platform. Palantir has also landed contracts in the technology sector with companies like Panasonic, which uses Palantir's AIP platform to scale their workforce and help engineers level up and do work more quickly and efficiently. And I think these catalysts are great for the company, and I hope it increases their share price. Even though on weakness, when the company drops in their share price, I'm going to be buying more of this company while practicing proper risk management, meaning that I'm not going to over allocate more than a 5% initial portfolio allocation. Clearly, there is high demand for Palantir's artificial intelligence products, but I don't see this company becoming a trillion-dollar company over the next 11 years. Maybe one day it could have a trillion-dollar market cap, but not in the next 11 years. Now, what I personally like about this company is that they have earned a profit in each of the last 4 quarters, where they reported more than $120 million worth of net income in the first 9 months of the year. And that would be an older statistic from 2023, which was fantastic. Also, there's the possibility of rapid earnings growth. So although they trade at a PE ratio or a price to earnings multiple of 56, which is relatively high, meaning that investors are paying a premium for their share price due to their growth prospects, this is actually much more digestible than a lot of bears believe. But let's return to the meat of the video regarding Palantir's path to becoming a $1 trillion company. I don't think it's wise to say that Palantir could achieve this in the next 11 years. Maybe they could achieve this over the next 25 years or over the next 50 years. But over the next 11 years literally should not even be on your mind. Nevertheless, investors continue to overhype this company. And again, like I've said before, this is a great company that I personally hold. But we need to be wise about this and see what the data is saying. When we combined all of Palantir's products and services together, there really isn't a realistic way for them to achieve an average growth rate over the next 11 years of 36% in their share price. Nevertheless, I do think that investors should pay attention to Palantir, and specifically their artificial intelligence platform. There is a massive opportunity for Palantir and what they do, and I'm excited for what this company could become in the future. But again, we need to be wise about the company that we invest into. Now, I do think investors should pay attention to Palantir's AIP platform because of its massive potential for future gains for the company. And even if the market cap does fall short of a $1 trillion valuation over the next 11 years, I still think that this is a good company. But please be aware of articles like this one and various investors who are trying to overhype this company. Make sure to do your own research, look into the company, and make sure that it's right for your portfolio, and please be realistic about the companies that you are investing into. Do not use this as a get-rich-quick scheme. So those are my thoughts, but I would love to hear your thoughts down below. With that being said, don't forget to go and annihilate that like button right now, subscribe if you are new, and I will see you in the next YT video.